Bro, I literally just recorded this entire video on on advanced market structure, and I looked at my OBS, and this shit was on full cam. I recorded this whole video without y'all even seeing my screen. All right, round two, I guess. I guess that's helpful for you guys because now I know what I'm talking about even more. Okay. You know what I realized though? This is low-key like the same shirt that like Clav was wearing. You feel me? You know. Ah. Alright, lock the fuck. Market structure. Advanced market structure, not basic market structure. So, basic market structure, we know that price can move making higher highs, higher lows, higher high, higher lows, or it can move making lower lows, lower highs, lower lows, lower highs, lower lows. It can move like this, or price can move sideways. This is like as basic as basicness gets, okay? But what people don't understand is internal market structure and fractal market structure. That is where they get confused. That is where they mess up their daily bias and they trade in the complete wrong direction. Is because they understand this stuff, but they don't know when to actually be using this stuff to trade in the right direction. If that makes sense. So basically, in the real life markets, this is what charts will look like, and it's really complicated, right? It's not making the simple highs and lows, right? As nice as it would be for price to be as simple as making lower lows, lower highs, and then it starts making higher highs and higher lows. As simple as that would be, right? Because then you'd be like, okay, boom, it switched to higher highs, higher lows, place your trade, bang, right? You feel me? But like, unfortunately, price isn't that simple. Actually, kind of fortunately, because if price was that simple, then everyone would be millionaires. But basically, it's complicated. It looks like this, okay? Now, the main mistake, right, that most people make, the thing that I'm going to be teaching you guys, is that they see something like this. High, 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 low, high, 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 low. Oh, okay, change of character, and then they go long, like this. Right? And then they get stopped at, and then they wonder why. But that's because this change of character was just facilitating the internal structure pullback. So this was the internal range, like this. This was the entire range. This change of character came back, tapped into this demand zone, and then we pushed lower. Okay? And then what are you expecting next to happen? You're expecting this range to hold. You're expecting this entire range. You see this change of character. We expect this demand zone price to come up, hit this demand zone, and push down lower. But it doesn't. It breaks above the swing. The internal. So only once price comes and breaks above and violates the internal high is then when you look for longs. Okay, that is when you can be like, okay, there's a change of character right over here. Let me take this demand zone. Let's say there's some like liquidity in this leg up, and then you can take your trade like this, targeting the new week high. Weak as in week, not week, not like weekly, but like week. And let me show you some on chart examples of this. So let me take this swing on GU. Okay, so we obviously see that price is making lower low, higher low, higher high, higher low, higher high. We've made our higher low, and then we're seeing what happening next. But basically, we're in an uptrend. Okay, pretend that this is the range that we're working with. Okay, and by the way, if it's hard to like it's something like this where it's like kind of difficult to see the internal structure, go to a lower time frame. So on the lower time frame, what do we see? We see a push down. We see some consolidation. We see oh my days. We see a push down. We see a push down. Some consolidation. A push down. A push up. A push down, and then we see a push up that broke the internal structure. So this is where most people mess up. They let's say we look into charts, okay? They see a change of character right over here, like this, boom. And then they're like, okay, change of character, demand zone, I'm gonna go long, like this. And then they get stopped out. and then they wonder why they got stopped out. Okay, or like over here, they would be like, okay, price came down, boom, a change of character. Okay, this is my demand zone. I'm gonna go long, and then they get stopped out, and then they get really confused why they're getting stopped out. Okay, but the reason they're getting stopped out, for example, in this example that I gave you here, where they trade like this, like they had the trade like this, because they thought that this was a change of character, right? But they're not understanding that this, from this consolidation up here, this down to here, this is the internal range, and it's bearish. The internal range is bearish. This change of character that happened right over here is just facilitating the internal range pullback, if that makes sense. Because how does price move on every single time frame? Like this. Now, if you see a change of character here, that doesn't mean that, let's say, okay, wait. This is your leg. This is the main leg that we're working with, okay? Like this. Internal structure is doing the same thing. Internal. This is what the internal looks like, okay? And then you see a change of character. When you see this change of character, you can't think that, oh, there's a change of character, let me target the entire leg high, because now it's going to print a new higher high. You can't think that. This change of character is just facilitating, this was a bad example. Let me draw it properly. This change of character right here, boom, was just facilitating this internal range pullback. Now it pulled back. You see another change of character. Now you can expect it to break the internal weak low, okay? Only once internal structure strong high gets violated is when you start looking for longs. So in this example, what's the new high? It's this new pullback that was being facilitated, okay? So this becomes your new high, like that. This becomes your range, okay? Let's say that price comes down, and you see a change of character here, and then price, you think it's just facilitating a pullback, because that's what I just taught you. You think it's coming into a demand zone, and then it's going to make another low low. But it doesn't do that. Instead, price continues, and it breaks, and it violates the internal strong high. That is the only point in time you should even be thinking about changes of character. Before this high was protected, you shouldn't even be looking at changes of characters, okay? You should just understand that internal structure is in a bearish move, okay? So over here, this was your swing. Anything that happens within the swing should not matter. It shouldn't matter at all, okay? Because this change of character is just facilitating the internal pullback. Like, it should not matter. The only time you should even be looking for changes of characters is when highs are broken, okay? And that's what I'm going to show you right now. This is our range, okay? What are we expecting? We're expecting, oh, okay, maybe there's like a demand zone over here, because internal still bearish. We're expecting, okay, price will come up. This is a strong high, internal structure high, so we'll probably see a change of character and then a continuation down. But what happens? It breaks through high, basically. It breaks through the internal high, and that's when we're like, oh, okay, now we're switching bearish. And that's the only point in time where you should be looking for longs. Let me give you another example. Okay, take this as our new range on Euro USD. We're in an uptrend. Boom, 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 boom. Higher low, higher high, higher low, higher high. We're in an uptrend, okay? Now we're looking at internal structure. What's internal? We can obviously see that internal structure at this point in time was bearish, okay? Let me show you this. This is where most people make a mistake. Just looking at this leg down, okay? Just looking at this entire leg down. People would take so many losses just in this leg down. Why? Because they're looking at every single change of character. They see this change of character, and then they go long from like here, like a demand zone from here. They'd go long like this, targeting the high. Okay, like, you're obviously gonna get stopped out with something like this. Okay, let me give you another example. Boom, they see this push up, push down, push up, change of character, and then they go long. They go long like this, right? And then they get stopped out. Over here, they see this push up, push down, push up, change of character. They place a position, and then they get stopped out. So many stop losses, probably even more. I'm just not even catching them. Oh, look, there's one right here as well. Boom, push up, push down, push up. Change of character. Oh shit, they place a trade, and then they get stopped out, right? They get stopped out. So many losses just in this leg down, unnecessarily, right? Stop looking at changes of characters. The only point in time you should look at a change of character is when you're. So if I'm looking at a change of character towards the upside, internal structure must be bullish. Okay, same thing. If I'm looking for a change of character towards the downside, internal structure must be bearish. Okay, so in this case, let's take this swing. We had a push up, we had a push down. Okay, this is our internal swing. Okay, or not swing, it's just internal. It's our internal range, not swing, range. This is our internal range. Whatever happens in here, I couldn't give a shit. Candle could literally print sideways. I didn't care. Okay, I couldn't give a shit. The only point in time I care is when one of these, the high or the low, gets violated. Okay, in this case, we're in a downtrend. So this is the weak low, this is the strong high. So what are we expecting? We're expecting a demand zone from up here to cause a change of character and then push price even lower and break the weak low. But it doesn't. Price continues and violates the strong high. What does that tell us? That price is now bullish. Price is now bullish. Now we can look for changes of characters, okay? So let's say there's a beautiful demand zone right over here, just like this. Why is this a good area of demand? Because there's so much liquidity, right? And on top of that, it's in discounted price. As you know, above the 50% premium, below is discount, okay? And we want to, in an uptrend, we want to be trading in discount. In a downtrend, we want to be trading in premium, okay? So it's below the 50%, and there's so much resting liquidity, okay? Price comes down. Now we can look for changes of characters, because a change of character towards the upside would tell us that price is now continuing in the internal direction, which is an uptrend, okay? So we see this change of character. Boom, boom, boom. Change of character right over here. We can place a trade right here, right? And if you're a smart trader, you'd be like, okay, so now you target the internal high, because if price, let's say it's a downtrend and we see a breaker structure and a pullback, well, this is still, the range is still this is still your range, this is your target, okay? In this case, this leg up, this is the new range, this is the range, okay? It had a pullback. Now you're expecting this weak high to go, but if that's why higher time frames is so important. But we also know that the higher time frame is bullish anyways. So in this case, we can take advantage of this situation and target the swing high and not just the internal high. We can target the swing high and make a crazy amount of money, right? That's the importance of aligning time frames. Higher time frame, bullish. Medium time frame, so internal structure has just switched bullish. Lower time frame, we saw a change of character, bullish. Now we take a trade and we can target the entire higher time frame week high. Boom. I hope that makes sense. It probably does, but if you have any questions, you can DM me on my Instagram, or you can join my Discord. It's basically like a free community. The link for that will be in the description down below. I also do live trading in that Discord, so if you want to join the Discord to see me live trade, you can. But yeah, that's basically it. Let me recap. Stop looking for changes of characters. Changes of characters are going to happen everywhere on the chart, okay? Like literally everywhere. Look at the internal structure, the move that the internal structure is making. Only look for changes of characters when your internal structure aligns with the higher time frame. That is the only point in time a change in character should even matter to you, okay? That's basically it. If you're serious about day trading and you really want to fast track this journey of day trading, other than my free Discord, I do a paid one-on-one coaching It's just I work with you directly. It's completely tailored to you specifically, and I basically help you get funded, make consistent payouts, and become profitable, I guess. And if you want to do that, the first link in the description down below, you just gotta fill out that form. We'll hop on a call, see if we're a good fit, and then we go from there. But that's basically it. And I'll see you guys in the next one. Peace.